Listen, the IRS just dropped the official start date for tax filing, and I need you to hear me on this. The rules have completely changed. Not a little bit. Completely. And filing without understanding what shifted could delay your refund for weeks, maybe months, or create problems you never saw coming. New deductions can absolutely put more money back in your pocket, but other changes are quietly working against you right now, and if you're not prepared, you're going to get caught in the crossfire. If you rely on that refund to cover rent, bills, or just to finally build a small savings cushion, this matters right now, not next week, right now. This is information you need before you file, not after you're already stuck in IRS limbo wondering where your money went. Quick question, and I genuinely want to know. When you file your taxes, are you the type who jumps on it the second that W-2 hits your inbox, or do you wait maybe until March, maybe even closer to that April deadline? Drop it in the comments because there's no right answer. But this year, your timing matters more than it ever has before. Here's what you absolutely need to lock in. January 26th, that's the first day the IRS will accept and process returns for the 2025 tax year, official start of the 2026 filing season. Sounds normal, right? Late January, same as always, we've seen this 100 times. But here's what makes this year genuinely different. What's happening behind the scenes is something most people have no idea about yet. Major tax law changes signed last summer are taking effect right now. The IRS is running with significantly fewer workers than last year, significantly fewer, and they're shifting away from paper checks toward electronic payments. All of that together makes this season more complicated, more nuanced, and frankly, more dangerous than usual. For millions of American households, tax season isn't paperwork, it's survival. That refund is often the largest single payment they receive all year. It goes toward rent, catching up on bills, paying off credit cards, or building that emergency fund they've been desperate to start. And with prices still crushing people on food, housing, healthcare, childcare, everything, there's a lot riding on this. Getting your refund on time and getting every dollar you're entitled to can make or break your financial stability for the next few months. The single biggest reason this tax season is different comes down to one thing: the new tax law President Donald Trump signed last summer. It's officially called the One Big Beautiful Bill Act. Yes, that's the actual name. This law made sweeping changes to deductions, credits, income thresholds, the whole structure, and every single change applies directly to the taxes you're filing right now for 2025. Some of these changes sound simple when you see them in a headline, but when you're actually sitting down filling out forms, they add layers of complexity that will confuse you if you're not ready. Here's a big one getting massive attention. There are brand new deductions for types of income that were never deductible before. A deduction for people who earn tips, a deduction for people who work overtime, even a deduction for people with car loans under certain conditions. Let me break this down so you know exactly what we're dealing with. Workers who receive tips, servers, bartenders, hairstylists, delivery drivers, anyone in service industries, you may be able to deduct up to $25,000 of that tip income. That's massive. That could significantly lower taxable income for millions of workers. Overtime pay, the extra money you earn working more than 40 hours a week, you can now deduct up to $12,500. Again, that's meaningful for people grinding overtime just to stay afloat, and if you financed a vehicle, you may be able to deduct up to $10,000 in interest paid on that auto loan. This is like the mortgage interest deduction, but for cars, which is completely new. All of that sounds incredible, right? More deductions mean lower taxable income, which means lower taxes or a bigger refund. Should be simple, should be helpful. But here's the catch, and this is critical. Employers didn't update their withholding tables after this law passed. The payroll systems calculating how much tax gets pulled from each paycheck didn't get updated to reflect these deductions. That means throughout all of 2025, paychecks may not have reflected these changes correctly. Millions of people had more taxes taken out than necessary without even knowing it was happening. On one hand, that could mean a bigger refund when you file. Sounds nice. But it also increases the risk of mistakes and complications if your W-2 isn't reported correctly, or if you claim a deduction that wasn't documented right by your employer, or if IRS systems flag something as inconsistent. That slows down your entire return. And with the IRS running on fewer staff than ever before, delays that used to take weeks could now stretch into months. What took a few weeks last year could take 2 months this year. Let me walk you through the other major changes so you have the complete picture. The standard deduction jumped significantly. For single filers, it's now $15,850. For married couples filing jointly, $31,500. That's a notable increase from previous years. For most people, especially the 85 to 90% who take the standard deduction instead of itemizing, this change affects almost everyone. The child tax credit also increased to $2,200 per qualifying child, up from $2,000 previously. For families with multiple kids, this makes a real difference. A family with 3 children could see an extra $600 in total credits compared to last year. That's real money for school supplies, clothing, activities, household expenses. Then there's the SALT deduction, state and local tax deduction. This is what you can deduct for state income taxes and property taxes, previously capped at $10,000, which limited people in high-tax states like California, New York, New Jersey, Connecticut, Illinois. The new law increased that cap dramatically to $40,000, and it's in effect through at least 2029. This mostly affects people in higher tax states and middle to upper middle income households who itemize. If you take the standard deduction, this doesn't touch you, but estimates show families earning between $200,000 and $500,000 per year could save around $1,200 or more just from this change alone. The administration says these updates provide targeted relief to working families, seniors, and middle-income earners. Acting IRS Commissioner Scott Bessent stated the goal was to build on last year's filing season and improve outcomes while keeping the tax system fair and supporting economic growth. And to be fair, the IRS says they've been preparing since last fall, updating computer systems, forms, publications, processing procedures, significant resources devoted to implementing these changes. But here's where reality diverges from the ideal. Even if the computer systems work perfectly, the human side of the IRS took a serious hit. The agency is entering this season with roughly 1/4 fewer employees than last year. That's a 25% workforce reduction. Units handling return processing, customer service, correspondence, problem resolution, all smaller, sometimes significantly smaller than 12 months ago. What does that mean for you? Accuracy matters more than ever. A small mistake that might have been caught and fixed quickly before could now result in weeks or months of waiting while your return sits in a queue for a human reviewer. One tax expert I read put it perfectly. Accuracy this year should be more like 110%. Not good enough, not close enough. Exactly right. This is why tax professionals, CPAs, enrolled agents, even IRS officials themselves are saying don't rush. Filing early isn't always filing smart, especially this year. Taking your time, double-checking everything, making sure you have all documents before filing can save you enormous headaches later. Another major change, and this affects certain groups significantly, is how refunds get paid out. The IRS is actively moving away from paper checks. Last year, approximately 9.5 million people still received refunds by traditional paper check. Still a huge number, but the IRS is making a hard push to phase this out. Going forward, direct deposit into a bank account is strongly encouraged and in most cases expected. If you file without providing bank account information, the IRS may send you a letter asking for it. There may be limited exceptions for people without banking access, and they're exploring alternatives like prepaid debit cards or digital wallets, but electronic deposit is now the default. Honestly, from a practical standpoint, it's faster and safer. Direct deposit refunds usually arrive within about 21 days, if everything's straightforward. Paper checks can take 6 weeks or longer, assuming nothing goes wrong. Plus, paper checks get lost in the mail, stolen from mailboxes, delayed by postal issues. Direct deposit eliminates all those risks. So if you've been avoiding setting it up, if you've been getting paper checks because that's just what you've always done, this might be the year to reconsider. Even opening a basic checking account at a local bank or credit union with minimal or no fees can make this entire process faster and easier. Now let's talk timing and why waiting a bit before you file might actually help you avoid problems and ensure maximum refund. A lot of credits and deductions require supporting documents that don't arrive in January, they come later. Energy credits for solar panels, home efficiency upgrades, electric vehicle purchases, you may need extra paperwork, receipts, certification forms, manufacturer statements that take time. Retirement contributions, especially for higher earners near income phase-out thresholds, come with updated limits and calculations easier to mess up if you rush early. The IRS saw a significant surge in amended returns early last year. People filed, got processed, then realized later they made a mistake and had to file an amended return to correct it. Amended returns almost always mean delays, often substantial delays. With fewer staff, those delays could stretch even longer. An amended return that took 8 to 12 weeks last year could take 16 to 20 weeks or more this year. I've seen this personally. Friends, family, viewers sharing their stories. People get excited, see their W-2 online, file immediately within days. Then weeks later, they're scrambling because a corrected W-2 arrives, a 1099 for investment income shows up, or they realize they overlooked a deduction they qualified for. Incredibly frustrating and completely avoidable if you just take your time. After all, you have until April 15th to file without penalty, nearly 3 months from when filing opens. There's no prize for being first, no bonus for filing in January. The IRS doesn't process returns faster because you filed early, and if you need more time beyond April 15th, you can file for an extension giving you until October 15th. Just remember, an extension gives you more time to file paperwork, not more time to pay taxes owed. If you owe, you still need to estimate and pay by April 15th to avoid penalties and interest. Another thing to keep in mind, customer service. If something goes wrong, if there's a problem needing resolution, calling the IRS may take longer than before. Phone wait times increased. Average wait time to speak to a live person was over 30 minutes last year. Some reported waiting hours. With fewer staff this year, that could get worse. I'm not saying this to scare you. I'm saying it to set expectations so you're not caught off guard. Being patient and thorough up front when preparing your return can save you from dealing with all that later. Double-checking math, reviewing forms carefully, making sure documents match, ensuring you qualify for deductions and credits you're claiming, all that front-end work prevents problems requiring you to call and wait on hold. This filing season isn't a sprint where the fastest person wins. It's carefully walking through unfamiliar terrain where one misstep causes problems. Rules change significantly. Computer systems changed. Staffing levels changed. How refunds are paid changed. All of that adds up to a season where taking a breath, slowing down, double-checking forms, making sure you really qualify for deductions can make a huge difference between smooth processing or a months-long ordeal. Something else worth saying that often gets overlooked. A big refund isn't always a sign you did something amazing. Sometimes a large refund just means too much money was withheld from your paycheck all year. You essentially gave the government an interest-free loan of your own money, and now they're giving it back without paying you interest. Getting money back feels good psychologically, feels like a windfall. But ideally, your withholding should be accurate so you're not overpaying throughout the year, then waiting months to get your own money back. You could have used that money all year for savings, paying down debt, covering expenses. If you consistently get large refunds every year, it might be worth adjusting your W-4 with your employer to reduce withholding so more money stays in your paycheck throughout the year. As we move through this tax season, this year may be something of a test for the IRS as an institution. Can they handle major policy shifts, significant tax code changes with 25% fewer people? Can a more digital automated system still feel fair and accessible to taxpayers of all ages and technology levels? Can they maintain accuracy and customer service standards while processing hundreds of millions of returns with reduced resources? We'll see how it plays out over the next few months. There will undoubtedly be problems, bottlenecks, frustrated taxpayers. That's inevitable with changes this significant. But how the IRS responds, how they adapt, how effectively they communicate will tell us a lot about the future of tax administration in this country. For now, the key takeaway, and I want this crystal clear, January 26th is just the opening day, not a deadline, not a race, not a competition for who files first. Preparation, patience, precision matter more this year than they have in a long time, possibly more than ever in recent memory. Let me give you practical, actionable steps you can take right now to prepare and set yourself up for success. Step 1. Gather all your documents. Don't file until you have everything. All W-2s from every employer you worked for during 2025. All 1099 forms for contract work, investment income, retirement distributions, other income sources. All receipts and documentation for deductions you plan to claim. All forms related to credits like education expenses, energy improvements, childcare costs. If you're missing something, wait for it. Don't estimate. Don't guess. Don't assume you can file now and fix later. Get everything first. Step 2. Understand which deductions apply to you. Review the new deductions we discussed. Do you earn tip income? Did you work overtime? Do you have a car loan? If so, make sure you understand how to claim these correctly and what documentation you need. Don't assume you qualify. Read requirements carefully, or better yet, talk to a tax professional who can guide you. Step 3. Set up direct deposit. If you don't already have it for your refund, do it now. Get your bank routing number and account number ready. Make sure you enter them correctly on your return. This speeds up your refund significantly and eliminates risk of lost or stolen checks. Step 4. Consider using tax software or a professional. If your situation is even moderately complex, multiple income sources, own a home, have investments, claiming new deductions you're unfamiliar with, consider tax preparation software or hiring a qualified professional. The cost is often worth it to avoid mistakes. that could cost far more in delayed refunds or penalties. Step 5. Review before you submit. Before hitting submit, review everything one more time. Check social security number, check bank account numbers, check your math. Make sure you've signed electronically where required. Verify all income is reported. Takes an extra 10 or 15 minutes, but could save weeks or months of problems. Step 6. Track your refund. After filing, use the IRS. Where's My Refund tool on their website or the IRS To Go mobile app to track status. You can check about 24 hours after e-filing. If there's a problem or delay, you'll see it there first and can take action sooner rather than waiting weeks wondering where your money is. Let's briefly address the other side. What if you owe taxes instead of getting a refund? First, don't panic. Owing doesn't mean you did anything wrong. Might mean withholding was too low, you had income not subject to withholding, or didn't make estimated payments if self-employed. If you owe, you still need to file by April 15th and pay by April 15th to avoid penalties. If you can't pay the full amount, file anyway and pay as much as you can. The IRS offers payment plans, and penalties for not filing are much higher than penalties for not paying in full. You can set up a payment plan online through the IRS website, and in many cases qualify without talking to anyone. Interest and penalties accrue an unpaid balance, but it's manageable. Whatever you do, don't ignore it. That only makes things worse. A few special situations worth mentioning that could affect your return. If you earned income through platforms like Uber, Lyft, DoorDash, Instacart, similar services, make sure you receive all 1099 forms. These companies are required to send them, but sometimes they're delayed or sent electronically and easy to miss. Also remember, you can deduct business expenses related to this work: mileage, phone costs, supplies. Keep good records and claim these to lower taxable income. If you received economic impact payments or advanced child tax credit payments in 2025, you'll need to reconcile those on your return. The IRS should have sent letters with amounts, but if you didn't get them or lost them, you can find information in your IRS online account. If you received unemployment benefits anytime during 2025, that income is taxable. You should receive a 1099-G form showing how much. Make sure to report it. If you bought, sold, traded, or earned cryptocurrency in 2025, you need to report it. The IRS has been cracking down on crypto reporting. Failing to report can result in audits and penalties. I know tax season feels overwhelming, especially with all these changes. But here's the thing, you can do this. Millions of people file successfully every year, and you can too. The key is not rushing, staying organized, asking for help when needed, taking advantage of resources available. If you haven't already, jump into the comments and let me know how you usually approach tax season. Do you file early, wait, do it yourself, or hire someone? Your input helps shape what we talk about in future videos and builds this community where we all learn from each other. Take your time, gather all documents. Make sure you understand the new rules and deductions. Set up direct deposit. Double-check everything before filing. Don't feel pressured to rush just because filing season opened January 26th. Knowing the rules this year, understanding what changed, approaching this carefully puts you in a much stronger position. You're more likely to get your full refund, less likely to have delays, less likely to deal with problems down the road. You've got this. And if you have questions along the way, drop them in the comments. We'll do our best to help or point you in the right direction. This is John from Dream Visa Updates. Good luck with your taxes this year. File carefully, file accurately,